Hello and welcome to this special. I have with me Sir Gerry Grimstone, Chairman of Standard Life. Sir Gerry, thank you for joining us on Bloomberg Quint. To come to the news first, you're just coming out of the HDFC Life board meeting. What was the outcome?
One of the important matters that we discussed at the board meeting today was the potential of an IPO of HDFC Life. This is something that's been on the stocks for some time now. There's still some final details to be settled, but basically the board is now keen to push on with the IPO, and I expect announcements to that effect to be made very shortly.
What happens to the merger? Because you waited for more than 12 months for the merger to happen. What happens to merger now?
We've had extremely good, warm discussions with our friends at Max Life, and there is no doubt that huge strategic value can be created for the shareholders of HDFC Life and Max Life to put the two companies together. Sadly, we've not yet managed to find a structure as an unlisted insurance company which has allowed us to do that. Many things have been tried over the last 12 months. We were confident that we were going to get approval, but sadly we have not got that approval. So in those circumstances, while still remaining very good friends with Max Life, and of course hoping that we can still bring about a combination of the companies in due course, the board thinks the company's best interests are served, subject to some final confirmations, pushing ahead with an IPO of HDFC Life.
So you had an exclusivity with Max. Now that exclusivity will go off, will Max be open to looking at a merger post an IPO, or are they open to, or are they free to go and scout for another partner?
That's obviously a question you should ask Max, but my impression is that they see huge value in a combination with HDFC Life. They are still working very hard on seeing how a merger can be put together. So I'm quietly confident that at some point in the future we will see these two fine companies put together, but I can't give any undertakings on that because all sorts of approvals would need to be obtained. But in terms of shareholder value and strategic value, putting those two companies together clearly makes good sense.
What about for Standard Life? How much will it be diluting its stake as part of the IPO, and do you have a timeline for the IPO?
Well, both HDFC and ourselves will have to contribute shares towards the IPO. There is an obligation that a new listed company must have 25% of its stock in the market within 3 years. We have approximately 5% of the stock in the hands of employees, so around 20% has to be found from HDFC and Standard Life. The two shareholders will be discussing the basis on which or how that will be done, and also what the initial size of the offering will be. Those are matters which I expect to be settled very quickly over the next few weeks.
And by when do you expect the filing to happen?
I say there's still some technicalities to be sorted. The board still has to make its final determination of these matters, but we're very keen to move on with this, so we will be doing all of that as quickly as possible.
So Gerry, you're in the midst of a merger with Aberdeen Asset Management globally, and that would make Standard Life and Aberdeen one of the largest investors in India. What kind of focus can we see from the combined entity on India?
India is going to be very important to the new company that we are creating, Standard Life Aberdeen PLC. That merger is still subject to regulatory approval, but my hope is that those approvals will be received in time for that merger to be completed on August the 14th. Of course, I can't prejudge that, but things are looking good so far. Bringing together Standard Life and Aberdeen makes us a very, very powerful force in India. Through our investments alongside HDFC, we will be a major investor in one of the largest life assurance companies in India. Again, through our investments with HDFC, we will be a major investor in the largest onshore asset management company in India. And Aberdeen themselves manage somewhere around more than $12 billion in India, in equities and in their very successful India debt fund. You put these investments together, and Standard Life Aberdeen will be one of the largest global investors in India. I'm very pleased about that because I am co-chairman of the UK-India CEO Forum with my good friend AJ Piramal, and I'm co-chairman of the UK-India Financial Partnership with my good friend Uday Kotak. I'm seeing both those gentlemen tomorrow, and I'm very pleased to say that the relationship between the UK and India continues to prosper. It's very important to companies such as myself, and all the CEOs on the forum are looking for possibilities, huge possibilities, to come out of Brexit for the India-UK relationship.
One of the things which have been debated about is the co-CEO structure which you have put in for the merged entity. How successful will that be? Because both are operational in nature. One would be handling the investment, one other would be handling the operations part of it. How successful a coach CEO structure would be?
Those quite understandably, those questions were asked when the merger was first announced. It's not a common structure in the UK, though of course it is a common structure in financial services. Actually, it was a very easy decision for the board to take to do that. It was very much the board's decision. It wasn't forced upon us. And it was an easy decision because the characteristics and qualities of the two individuals, Martin Gilbert and Keith Skeoch, are quite different. Both have very fine qualities, but the way we've divided up the duties, and there is no misunderstanding about who does what, there is no fudge, there is no compromise. Keith Skeoch is responsible for running the fabric of the firm, and Martin Gilbert is responsible for the externalities of the firm. Their personalities are different. I think the combination of the two will make a very, very fine CEO. So I'm quite confident about these arrangements going forward.
Two important challenges coming up for you. One is the Brexit, which is already under negotiation by the UK government. The second one is the referendum by the Scottish. How are you seeing both the challenges?
Well, of course, businesses don't like uncertainty. No business likes uncertainty. But Standard Life is over 190 years old. Actually, we're rather good at adapting to uncertainty. I'm a great believer in Charles Darwin. I'm a great believer in Darwinism. And of course, in times of uncertainty, those companies which adapt most quickly tend to be those that do best out of it. As to Brexit, we now have a set timetable. There's many things to be negotiated, so we await the outcome of that. As for Scottish independence, the outcome of the last general election in Scotland shows there is not such the enthusiasm for that anymore. In the end, it'll be matter for the citizens of Scotland to decide, but it is not something that I now lay awake at night worrying. I think things have moved on quite significantly.
So, Gerry Grimstone, thank you very much for joining us on Bloomberg Point. Thank you.
Thank you.